Closing bell ringing in 29 minutes. Coming up, we've got a money manager who is so right on the money that the last time he was here, both the picks he made jumped more than 20%. Today, he's got more names. You need to hear them if you want to see yield in your portfolio. All you have to do is look right now. Everything's in the green. The markets have been sweating out each win so far this year. And here are the tallies at the moment. Both the S&P and the Dow Jones Industrials up just about 15% year to date. Will both these indices and the NASDAQ continue to climb higher, or is it time to take a break because the markets are taking a summer vacation? Markets are heading for a summer vacation, says our next guest. Joining me now, Paul Dietrich, Fairfax Global Markets CEO and Chief Investment Officer. Everyone's gone fishing already? What do you think?
Well, they haven't yet. As we're seeing this week, we're going to have a positive week. But it wouldn't surprise me, given where earnings are, that we have a 5 or 10% pullback during the summer vacation. And that would be normal. That would be healthy. I don't believe we're going to have a 20% pullback unless there's some international disaster.
So 5 to 10, right?
5 to 10, because we did have 20% last summer and the summer before. So, but I don't think that's going to happen this year. I'm bullish for the whole year. I think that we could be up another 5-6% before the end of the year from where we are now. Even if we do have a pullback, that would put us at about 16,000 for the Dow.
There are the naysayers who, by the way, have been wrong all year, who would say this guy doesn't know what he's talking about. The markets don't grow to the sky, nor do trees, nor does anything in nature. They eventually stop. What do you say to that?
Well, I think at Fairfax Global Markets, where we are, we look at long-term trends, and we're seeing a reversal. For the last 13 years, I've been pretty bearish. I am now, for the last 6 to 9 months, seeing all of the leading economic global indicators that we look at pointing up, and now pointing up rather strongly, especially in energy, manufacturing, housing, all the things you've been talking about
today. And by the way, there's a reason to listen to Paul. His last two picks, he knows how to pick them. Verizon was one of them. And just look at a nice 20% gain there. All of your names have done very well for us, so we wanted to grab some new ones from you. And as we see, Verizon and Monsanto looking very, very good. Both of them 20% returns. How do you know how to pick these?
Well, again, we try to look at value stocks. We're value investors. We're looking for stocks like Buffett. We're looking for stocks that have very low PEs, have very high cash flow, have very high return on equities, and have something extra. Like Verizon, I believe that in the next 20 years, Verizon is going to be in the banking business. You're going to see money moving between cell phones, and people who don't have bank accounts, or just like nobody has landlines anymore, people are going to be using their cell phones as banks. Think about the profits.
Let's get to your new opportunities. And this time around, it's not necessarily individual names. You're taking a bigger basket play approach.
That's right. I mean, in looking at these long-term global trends, there are two things that just stand out that are revolutionary, and nobody's talking about them, or not as much as they should be. One is energy. We know that we're going to become energy self-sufficient by 2017. We're going to be a net energy exporter, the only major country in the world economy that's going to be exporting. And if you take Canada, the United States, and Mexico, with 450 million people, we could be the economic engine as much as Asia for the next 20 years.
These three names are down today, but when you look at some of their returns over the past year, I begin to wonder, is Paul buying at the top? Tesoro up 144% year over year. You've got Marathon Petroleum up 110% over the past year. And the price to earnings, though, very, very small, 7. So I like that. That certainly makes them affordable. Phillips up 95%. This kind of run-up continues?
You've got to look at the fundamentals. I think oil and gas prices, at least in the next 2 to 3 years, may go down because we're producing so much. But these refiners, you can't build a refinery in the United States because of the EPA.
Okay, so that's the point, everybody. They're not just integrated oil names. They are specifically focused on the refinery aspect of this.
Exactly.
And you can't really, because of the NIMBYs and the bananas, build any where just not near.
And you have larger demand for refined products, especially if the economy keeps going up. And they're going to be paying lower prices for the oil, but they can charge more, and that's the fundamental difference. They almost have a monopoly because of the EPA.
You believe in a manufacturing renaissance here in the United States. The administration would love to hear you say that. They've been pushing that, but how do you play it?
Everything is changing. It used to be, for the last 15 years, I've watched 6 million million jobs leave the United States for Asia, similar amount from Europe to Asia. Now there is a complete restructuring of global manufacturing, and I'll tell you why. But what's happening is we're having Chinese manufacturing and Asian manufacturing for Asians, American manufacturing for the Americas, and European manufacturing for Europe. It no longer makes any sense to ship jobs to China to produce products to bring back to the United States.
It's gotten more expensive, folks. It just has.
Yeah, labor cost, energy cost, and transportation cost. And you're seeing even Chinese companies like Lenovo moving into the United States to manufacture. This has enormous consequences for the future, and nobody's really talking about this really important trend.
You are, and we are, and we'll have you back to see how these picks went. But remember, folks, his last time around, up 20% apiece. Paul Dietrich, Fairfax Global Markets CEO and CIO, thank you so much for joining us.